Hi guys, I'm Karunya Rao, and in Ideas for Profit, the spotlight is on construction companies. Q1 FY22 revenue of construction players grew by 54% year-on-year, mainly on low base of the corresponding quarter. Project execution was affected in June quarter because of rising COVID cases and its impact on the workforce. On a sequential basis, construction companies' revenue dipped by 20%. However, in Q1, project execution was permitted this time around, unlike the Q1 of last year, when there was a ban on construction activity in the early part of the quarter. Moreover, labor migration in the second wave was far less, unlike June 2020 quarter, which saw significant labor migration to villages because of the outbreak of the pandemic. Therefore, the impact of second wave on the construction industry was much less compared to the first wave. Our high conviction stocks, KNR Construction, PNC Infra, HG Infra and NCC, with an established track record of strong execution and robust balance sheet, all of them reported higher top line growth of 64% year on year. Toll collection growth was strong in Q1 FY22 on a YOY basis as restrictions on traffic movement were less. Also in the June 2020 quarter, if you remember, there was a suspension of tolling activities for about 19 days owing to nationwide lockdown. Meanwhile, key raw materials that are used in the construction space, steel, cement and diesel, all have witnessed a steep increase in prices compared to Q1 last year. So while construction companies have a pass-through clause, it's not possible to pass on the entire cost increase, especially over the short term. Raw material costs for the construction companies were up approximately 350 basis points on a year-on-year basis. Benefits on account of operating leverage due to better execution is what helped offset the impact of increasing raw material prices to some extent. While the EBITDA margins were lower year-on-year, construction companies' net profit margins were higher by about 170 basis points given the strong execution and top-line growth. Depreciation and interest expenses were spread over a large revenue base, which helped improve the net margins. Interest cost as a percentage of sales for the entire universe stood at 10.3% compared to 14.4%, mainly driven by a better revenue base. For the conviction stocks that I just flagged off, interest costs were at 5.1% compared to 8.9% in the year-ago period. Infrastructure creation is the key focus area for the government, given its vital role in economic development as well as job creation. Now remember that the government has announced a massive 111 lakh crore national infrastructure pipeline over FY20 to FY25, which would boost the opportunities for construction players. Road development, railways, irrigation, as well as affordable housing, these are the key areas of government spending where opportunities are available for the construction companies. Q1 has seen much better execution compared to corresponding quarter last year. Also, labor availability and project execution have reached pre-COVID level for most construction companies by the end of Q1. Impact of commodity prices is also expected to be marginal as most contracts have a pass-through clause and the companies have guided to broadly maintain the margins in FY22. So overall, we expect better earnings growth for these companies in FY22. With the government's focus on infrastructure, most companies have guided for healthy order inflows in FY22 as well. Moreover, the companies have a healthy order book of about 2 to 4x of sales, which provides growth visibility over the medium term. Now, we continue to be positive on our high conviction ideas, the likes of KNR, PNC Infratech, HG Infra and NCC, which have demonstrated strong execution capabilities and a healthy balance sheet, which will enable them to take advantage of the huge spending on infrastructure. Now, MC Pro's high conviction ideas KNR, PNC and HG Infra are up by an average of 63% since our recommendation in Feb 2021, hugely outperforming the benchmark Nifty, which has gained about 13% over the same period. With better earnings visibility, we believe these companies are expected to re-rate further.